All right, hello and welcome to Camel Finance. I'm your boy Camel, and today we're going to be going through the recap for what happened this week. I want to show you the charts, examining the closes from Friday, and how I plan to deal with these markets as a pro swing trader coming into the next week. Just before we start, I want to say hello and welcome to all of the new subscribers. I've got around 200 subscribers in the past 3 weeks, so hello and welcome to all of you. Big shout out to the channel OGs and the triple OGs. You know who you are. And without further ado, let's get into this. So what do we have this week? Well, we saw a jump in jobless claims and they were reported on Thursday. We also had weaker than expected wholesale price pressures and we had PPI come down. The interesting thing about PPI, as you can see from the May's readout for April here, we are now, in terms of PPI, back in historical range, as you can see. What's most interesting about PPI is it always leads CPI. So with PPI coming down, we can expect to see CPI continue to fall. We are also able to check off this idea that we are going to be able to swerve a recession, although the Bank of England continues to hike rates. To be fair, the Bank of England needs to, because this is the PPI, as you can see, for the UK, continuing to spike. Not the same story here in the UK. However, we are still, I believe, in this Goldilocks zone that I've been talking about. CPI is indeed coming off, at least in the States. There is still this narrative, this idea that we could possibly swerve a recession whilst we're in this Goldilocks zone, whilst things continue to look not so bad. There's also the idea that we could possibly see a pause in rate hikes as early as next month, and this is currently sat at 85% probability. So with the stars aligning, with CPI apparently coming off, with a pause in sight, the market should have space to rally whilst it's in this Goldilocks zone. Over in the Bitcoin world, we're seeing for the second time in a month another false rumor that the US is selling seized Bitcoin, and that sent the price down over 5% in a matter of minutes. But remember, the US government is going to continue to dump a portion of their Bitcoin stack every time there's a bank failure or talk of debt ceiling, so that the government media outlets can point to Bitcoin's volatility and psyop the normies into rejecting it as a solution to the macro meltdown. Remember, they do not want you to exit the system. They do not want you to be self-sovereign. But there's nothing they can do to stop it. Bitcoin supply held on exchanges has fallen below 6%, which is the lowest point in the past 5.5 years. Self-custody is indeed the way. And it's important to understand that if you do not self-custody your Bitcoin, then you really must consider getting yourself a cold wallet. The reason for this is the judge recently just ruled that the BlockFi users gave up their legal rights to their Bitcoin by using the platform, meaning that all $300 million worth of the crypto deposits are now the property of BlockFi. This is the risk you take when you do not cold store your own Bitcoin. There is no point in holding the ultimate bearer asset if you do not bear it yourself. Get your Bitcoin off exchanges. Despite all the fear out there and the negative sentiment, the activity of Bitcoin small entities is at rock bottom, which was last seen in 2012. Large entities are in line with the bottom of bear market cycles. If I click into this chart, you can see the large entities are in red, the small entities are in blue. These are the levels at which usually correspond to the bottom of bear markets before major upside rallies. This does not speak to retail being heavily in the market. This does not speak to long trades being crowded, and in fact speaks to plenty of upside opportunity for Bitcoin. If you look closely, you'll spot the opportunity. Need I say more? And on top of that, viewers of the channel knew this dip was coming since the last 60-day cycle. We got long at the last 60-day cycle. By the time we got up here and started to roll over, people that were watching the channel knew, because I was telling them there's going to be another 60-day cycle show up. And like clockwork, it has. So whilst the sentiment is really bearish at the moment, whilst it doesn't feel good to watch Bitcoin decline like it has been of late, this is just another day in the matrix. This is just another cycle. Remember, these cycles form to flush sentiment. That's their purpose. Their entire purpose is to reset sentiment so the market can continue higher again. We'll get to the charts in just a minute. A lot of people have been reaching out to me, asking me, where's this price going to stop? How low's the dip going to go down? When's it going to end? Well, let's just keep it as simple as possible. We're bullish above 25k. And we're cautious below. It really is that simple. So where does this 25k call come from? Why 25k? Well, this is an inverted Bitcoin chart. So as you can see, it's upside down. And what we have is a massive head and shoulders where the neckline is at 25k. All the while, we are to the upside of this neckline. Then there's no reason to be concerned. This is just a technical pullback. The timing is perfect as we're right in that 60-day cycle low. And as long as we can hold this neckline break, then we maintain very strong bullish posturing. Speaking of bullish posturing, I really hope this comes to fruition. Kush here says his expectation stands that we see an all-time high within the next 6 to 8 weeks. So this is incredibly bullish. maybe too bullish, although I would not be surprised. Bitcoin can do Bitcoin things, Bitcoin will do Bitcoin things, and if it was to undergo one of these parabolic advances, I would not at all be surprised. That's not to say I'm calling for a parabolic advance like this, but I am calling for continued upside in the short to medium term. Something I want to keep an eye on going forward is we currently have extremely bearish posturing for the S&P 500. As you can see, way below the C19 era and almost as bad as the great financial crisis. Also, this is potentially fuel to catalyze upside, upsetting the most amount of market participants, which is of course what markets do. Markets always move to harm the most amount of participants, and right now the most amount of participants would be harmed with an upside rally. However, we could be running into some potential issues here as global liquidity is starting to decline. So we will need to keep an eye on global liquidity. We will want to see global liquidity come back to the market. If this continues to decline, then it could of course pressure risk assets. And speaking of pressuring risk assets, hopping into the charts here, this is the dollar index, okay? Undeniably, we have a breakout now. We have a breakout, it's consolidated sideways, but we've taken out this local high from around the 2nd of May. So short term, we're likely going to get a counter trend bounce. I do believe this will be contained underneath this yellow downward sloping resistance line and then roll over. But if we were to break out of this downward sloping yellow resistance line, then I would expect to see significant technical damage occur and downside action in the risk assets. I do not put much weight on a breakout here. I do favor the rollover scenario. And then I think it's finally time to make our attack down to the mid-90s that I've been calling for since all the way back here. Yields continue to obey this green squiggle, don't they? Yields, this is the 10-year yield, the chart of truth, continues to look heavy. The same is true of the 2-year yield, continues to look heavy. And TLT not signaling a recession trade just yet. A recession trade signal would come from a breakout at the top of this range. So let's hop into the Bitcoin chart, okay? Like I said earlier, we are just repeating what we did here, aren't we? We're having a good, clean flush of sentiment into that 60-day cycle low. The cycle low should show up any day now. Now, if I count the days between the lows, you'll notice yesterday's wick was day 63. Now, we can run as late as day 66 and still be perfectly within the timing window for the 60-day cycle low because it has a 10% tolerance either side. We haven't quite made a touch of this 25.2 level, which you can see is denoted by the yellow horizontal line. This would be the top, the neckline of that head and shoulders that I was talking about earlier, where we've got our shoulder, our head, and another shoulder. This would just be a back test of the neckline before resuming higher. As I've been saying over and over again, we can actually come all the way down to a touch of this red upward sloping support line and still maintain bullish structure. For me, enough damage has been done, enough of a pullback has been seen here, that all I'm looking for is a strong reversal, a strong swing to form out of here, perhaps today, tomorrow, Monday, or even Tuesday. And then I think it's time to just repeat the game as we always repeat it. We're going to draw a trend line, another one here. And a break of that trend line to me will signal that we have indeed found the cycle low wherever it forms. Now I'm still open to seeing a bit more of a flush lower in the short to medium term over the next few days. But particularly if we can break out of here, if we can get one of these big green candles show up, then I'll have no problem marking this as the cycle low, saying we found it, adding to longs and going again. What's really interesting to me with all of this is if I hop into the crypto related equities, whilst Bitcoin continues to make lower lows, the crypto-related equities are showing relative strength here. So here's Coinbase, okay? We got long on a breakout, retest, we'll be looking for that resumption. But like I said, Bitcoin's making new lows, whilst Coinbase is not. Here's Riot, okay? Riot still, as you can see, holding this level, still not made a new low. So this is relative strength compared to Bitcoin. Perhaps Riot knows something. If we can get a strong push off of here over the next couple of sessions, then expect me to add to longs and move the stop up. Marathon, again, it's a similar story, isn't it? Not making significant new lows, which is indicative of relative strength here. These higher beta crypto-related equities likely know something that the Bitcoin price isn't telling us. And likely what they know is that we are about to come screaming out of this cycle low. MicroStrategy has made a clean undercut. So we have a good candidate here to see a swing reversal show up over the next couple of trading sessions and then a breakout. So in summary for Bitcoin, I do think this dip is nearly over. Now I am open to seeing in the worst case scenario a touch of this red upward sloping support line. I think most likely we're going to hold 25k, although I wouldn't be surprised to see us quickly wick it and then go. That would trap a bunch of shorts on a break down below this yellow line here, as you can see. I do think we are in a rinse and repeat stage, just like we were back here. We drew a trend line, we waited for the swing, we waited for the push off and the breakout, we got long, which was this initial entry, as you can see, this initial position. And I don't think this time is different. I think we're going to get this last flush down. We've been patient all the way since around this neighborhood, and here we are at the timing band, ready to see a cycle low. Any kind of strong big green candle like this will confirm we're in a new cycle, and it'll be time to add to positions, including those crypto related equities like I showed you, including Ethereum as well. So once Bitcoin gets that big green push off, I expect to see Ethereum get a big green push off, and then we'll add along from wherever the level is with a stop below wherever the low forms. Whilst we're talking about cryptocurrency, I just want to flag, here's XRP. So XRP is still doing what I thought it would do. I still expect this to continue to bleed down, and then I think the longs from the lower level, when we get a trend line break at this downward sloping red resistance line, will be a massive, massive trade for this year. The dollar bid is forcing the metals lower. So you can see gold here, possible breakdown. So if we can get a retest and a resumption off of here, this could well open up a lot of downside for the gold market. On Thursday, I posted that I was out of the silver trade. Once we got back underneath these lows, I cut the trade. I posted this to Twitter. So I've taken a very, very small loss on this silver trade. On Thursday as well, I also posted that I cut my gold miner position. So I walked away with a tiny bit of profit on that, a tiny bit of loss from the silver trade. This is what it's about, okay? Cut the ones that aren't working as soon as you possibly can. Give them as much space, but once we got a breakout, a retest, a double top, and a rollover, it's time to exit this market. So I'm back to having 0 positions on the metals. And in terms of the stocks, I also posted on Thursday that I cut Nike once we got down to this level here for another very small loss. That so far has turned out to be the right move. Like I said, cut the losers as soon as you can. Give them as much space as possible, but then cut them to prevent losses and push the ones that are working. So IPX continues to break out. So I remain long and strong, and I continue to push this. The same is true of Apple, isn't it? So Apple continues to trend up, continues to hold this blue upper sloping support line. All the while we're above that, I have no problem with continuing to push this long. The VIX, as you can see, still under pressure, still does not speak to any kind of stock market crash or stock market volatility event. It keeps popping up into this green area of support, which has now been flipped into resistance, and it can't break above that. So things can change, and they can change quickly, but they haven't changed yet. We also see the Dow put in something like a 200 or 300 point move down, only to then reverse it into the close on Friday. So I still expect this to continue to the upside. I'm still pushing this long, as you can see from the trend line break in yellow. Still pushing my NASDAQ long from the trend line break in green. This continues to work its way up towards 9-month highs. Again, does not speak to an impending stock market crash at this moment in time. And the S&P 500 continuing to not confirm a new daily cycle. So we really do need to see this clear this high and break out of this downward sloping purple resistance line to confirm that we have indeed got a new cycle in play. But that is exactly what I expect to see from the S&P over the coming days and weeks before we get that next drop into the cycle low due around the start of July. One last thing before I go, Coinbase executive has just purchased 810,000 Coinbase shares. So my long that seemed possibly a bit premature is likely going to be supported by this insider buying. So happy days there. Hopefully we can get, like I said, we've got breakout retest. We just need to see resumption off of here. And I think that will open up much higher numbers for Coinbase. So have a great weekend. I hope you found that helpful. Stay patient. Don't let the emotions get to you, okay? Don't let the negative sentiment get to you. We are right in the timing band to see a reversal, to see another 60-day cycle for Bitcoin. When we were at the last cycle low, the sentiment here was very, very bad. The sentiment down here was nasty. And since then, of course, we have done Bitcoin things. So I expect this time not to be any different. I don't want to go jumping in front of any trains. I do want to see a reversal, like I said, but I do expect us to have one any day now. In the meantime, enjoy your weekend. Take care from me. All the best. Cheers. Bye.